Greetings, my name is Christopher Bell. I'm a certified public accountant. In this video, we're going to cover the concept of accounting for dividends. What is a dividend? A company has accumulated profits, for example. In this example, we're using Realty Income, a very popular dividend-paying company. And this company wants to distribute those profits to its shareholders. So what it does is it declares a dividend and then it pays a dividend. There is accounting involved in this. You have to account as an accountant for the company, the dividends that are declared and paid by the company. Now, it's actually not that complicated. In accounting, dividends come out of retained earnings. They reduce the value of retained earnings. Retained earnings is simply your accumulated profit and loss over time. It is earnings retained by the company that have not yet been paid out in the form of a dividend. So, let's go ahead and dive into this example. So here we have Christopher Bell, who owns all of Realty Income. I own this entire company. I'm the sole shareholder of this publicly traded company. Not the case, but I wish, but I'm not. And the company decides to pay a dividend to Christopher Bell. So we have this information here. Realty Income Corp decides to pay shareholders, aka Christopher Bell, a dividend. There are currently 1.5 million shares outstanding. This is not, I just made this number up. Don't think this is how many shares are outstanding for Realty Income. Realty is able to pay a dividend of 45 cents per share. Record the journal entries for the following dates. So there's multiple dates that are involved with a dividend. You have the date of declaration, which is the date that the board of directors says, we are paying a dividend. Officially, boom, we're paying it. That's the date of declaration. The ex-dividend date is if you buy a share of Realty Income on or after the ex-dividend date, you don't receive the dividend. Why? Because there has to be some kind of cutoff period, obviously. If you bought the shares the day after the dividend was paid, well, obviously you're not going to get the dividend because you bought it the day after. Well, there's also this thing called settling of trades. When a share changes hands, it takes some time for all the accounting and record keeping to go through. So it takes a couple days for that transfer of ownership to actually take place. So they have this thing called the ex-dividend date, where if you buy stock on or after the ex-dividend date, you don't get the next upcoming dividend. So after the ex-dividend date, the next date is the record date. This is the date that the company itself, Realty Income, would basically say, here's all our shareholders on this list. Here's who we're going to pay a dividend to. And then finally, we have the actual payment of the dividend. So there's multiple dates involved here. The question is, which ones require journal entries? Well, first of all, the date of declaration when the board of directors says, hey, we are officially paying a dividend. That requires a journal entry. What is that entry? It is a debit to retained earnings and a credit to dividend payable because the company has finally incurred an obligation to pay out a dividend. Why are we debiting retained earnings? We're reducing retained earnings by the amount of the dividend because the accumulated profits of the business are now coming out of the business and they're going to the shareholders. So how much do we debit? Well, there are currently 1.5 million shares outstanding, so all of these shares are going to get the dividend. We're able to pay 45 cents per share. So the math is very simple. You take 1.5 million shares, and each share gets 45 cents of dividend. Boom. We're going to have to pay $675,000 total of dividends. So it's a debit to retained earnings. We're reducing the retained earnings. It's an equity account. You debit it to reduce it for $675,000. And we have dividend payable, which is the same amount, and we're crediting it because now it's a liability of the company. They are going to pay a dividend payable. So now that that's done, we have that entry on our books. Our retained earnings has gone down. The company's equity has gone down. Key point to remember. Now we move on to the ex-dividend date. Well, what happens here? Well, this is for the stock exchange. Okay, the stock exchange sets this, and it's all about settling shares. What is the accounting entry? There's actually no entry. There's no fundamental transaction that has happened. This is, in regards to a stock exchange or in the shareholders. Doesn't matter for the accounts. Next, we go to the record date. This is the date that the company says, we're going to pay this amount of dividends to this amount of people. Well, what has changed? Well, we already know we have 1.5 million shares and we're paying 45 cents per share. Now we're just looking at a list of shareholders, the official shareholders that are going to receive the dividend. So, no entry. And then we get to the actual dividend payment. Now we are taking cash out of our corporation and we are sending it to our shareholders. So our cash is going down. Well, what else do we have to remove? Well, we've already debited retained earnings. Retained earnings has been reduced. Our company's equity has already been reduced. But we have this dividend payable that we still have to remove. How do you reduce a liability? You debit the liability for $675,000 and you credit cash for the same amount, the amount of dividend that we paid. That's it. So in dividends, you just need to know the amount of the dividend, and you only care about, and from the accounting perspective at least, the date of declaration, which is where you reduce the retained earnings and accrue the dividend payable or record the dividend payable. And then on the date of payment, you remove the liability for the corporation and you send out the cash to the shareholders. It's as simple as that. That's all a dividend is taking equity out of a business and giving it to the shareholders. Hopefully you learned something. Hopefully that makes sense. Talk to you later.